Very soon, we will know the details of Liberation Day. But what's important about Liberation Day is understanding how much more of an impact large-scale tariffs would have on the United States relative to history. Take a look on screen here. This is a chart that says the US economy is risingly resilient on imports. And it shows that when we compare our economy today, one where we're reliant on about 13% of our GDP from imports. Said another way, imports as a share of US GDP. So if our GDP is $100, 13% comes from, or $13 comes from imports. Okay, simple, right? But if we compare that to the early 1930s, we can actually see that imports only made up about 3.8% of our economy, which means today tariffs are worth or could potentially have 3 times the impact on our economy. This could be contributing to why the Atlanta Fed GDP has started to plummet in anticipation as businesses shift and jigger their supply chains in anticipation of the tariff announcement coming. Especially since the Smoot-Hawley tariffs are often credited with the Great Depression, though that's not entirely accurate. We actually started initiating tariffs in the early 1920s during the Roaring '20s, and the people found them relatively fond and useful during a booming time in the economy and revenue drivers, so thought, hey, let's just do more tariffs. The Smoot-Hawley tariffs of the early 1930s came when the Great Depression was really already underway. So the question today is, are we going to be like the early 1920s or are we going to be like the early 1930s? The problem, though, is we have very few hints on what to expect tomorrow. Often with such a policy announcement, such as what we're getting tomorrow, we would have some form of leak already by this point with an outline of what's coming. But it's possible they only did that for Joe Biden because they didn't have confidence that Joe Biden was actually going to read it correctly. I'm not trying to insult Joe Biden. I think that's just honestly what was happening. Now, the Wall Street Journal is reporting the following. They're stating that Trump's team in recent days has considered imposing a 20% universal tariff on virtually all imports, but USTR's office is offering a third option. Okay, before I tell you about this third option, let's just simplify this for a moment. If Lutnick has to sit there and go through every single different country and go, all right, that country has VAT, tariffs, not really tariffs, right? VAT taxes, value-added taxes of 18%. We're going to say 12% of that is, based on just being above and beyond a 6% normal sales tax. And they've got tariffs of 6% over here. That works out to a total of 18% for that country. And they're going to go through and they do that for 150 different countries. It's going to go, the complexities of that are going to be insane because now somebody at the customs, the custom officials who process this stuff have to sit there and go, all right, let's calculate all this out. It's just going to be like the memes. It's going to be a nightmare. So as a result, Donald Trump has floated this idea about maybe just doing a 20% universal tariff. Package comes in through the port, 20%. Stamps, please. And it's like we're going to start another tea party to protest the stamps. Then there's also the rumor now circulating that 20% is just going to be the cap, that we think the average is going to be like 15%, and that every country is going to get a blanket tariff of a cap of 20%. And depending on how nice they are to us, will determine how much they're each levied. But then again, you have to go back to the customs officers and go, okay, see how much coal is in your sack this Christmas. Germany, you bastards. I'm German, I can say that. Anyway, you can see the complexity of this and why there's confusion showing up in economic data. Now, hopefully we get clarity tomorrow. That's the hope. Because if we get clarity, let's go. Plenty of stocks to go shopping. Plenty of good deals out there. Don't even get started on Newsmax. Not a good necessarily deal. It just keeps going straight up. Mind you, this complexity is not lost on the Europeans either. Listen to this clip from the EU commissioner. I think it's really interesting to just listen to about a minute of it, just so you can kind of see how the others are speaking about these tariffs.
I'd like to focus on the threats to global prosperity and stability, thus our competitiveness, and the rise of protectionism.
A rise of protectionism quickly is just a way of saying, hey, we want to protect our local workers in the United States. We want our local unions to benefit. We want local manufacturing to benefit. We are protecting the workers of the United States. That's when you hear protectionism, think of that.
And as our domestic agenda cannot be seen separately from global developments around us, let me start with the US tariffs.
There we go.
Let me be clear. Europe did not start this confrontation. We think it is wrong. But my message to you today is that we have everything we need to protect our people and our prosperity. We have the largest single market in the world. We have the strength to negotiate. We have the power to push back. And the people of Europe should know that together we will always promote and defend our interests and our values, and together we will always stand up for our Europe. But tariffs across the board make things worse, not better. Tariffs are taxes that will be paid by the people. Tariffs are taxes for the Americans on their groceries and their medication. Tariffs will just fuel inflation, exactly the opposite of what we wanted to achieve. American factories will pay more for components that are produced in Europe. This will cost jobs. It will create a bureaucratic monster of new customs procedures.
Okay, that right there is really important. We already know that it's going to take quite a while to sort of rebuild supply chains in the United States, if that's even feasible, right? Because a lot of people worry that as soon as Trump leaves office in 2029, if he actually does, then companies might end up just right back to free trade under a new administration. But this right here is actually what's going to create a little bit of a mess for quite a while. You saw this with the auto tariff announcement. 25% tariffs on autos, except for parts. We need to figure out how we're going to calculate what parts are from where so we can actually tariff and tax it appropriately. And so we're going to take another month to figure that out. So that right there is an understated, huge issue.
And today, nobody needs that, neither in the United States nor in Europe. So our strategy builds on 3 pillars. First, we are open to negotiations. We will approach these negotiations from a position of strength. Europe holds a lot of cards, from trade to technology to the size of our market. But this strength is also built on our readiness to take firm countermeasures if necessary. All instruments are on the table. Second, we will keep diversifying our trade with other partners. You mentioned it, Antonio. Our hallmark is not only that we are the biggest market in the world, but that we are reliable and predictable. We honor our commitments.
Okay, this reliability issue is actually a huge slam on the United States because guess who is now talking to China more? Japan and South Korea. Not great. This type of coordination is exactly the kind of coordination where we start somewhat losing some of our alliances. Look, Wall Street Journal. China says it is aiming to coordinate tariff response with Japan and South Korea. This is not fantastic to hear. These countries have not discussed trade with each other in a 3-way talk for 5 years, since COVID. And now because of Trump, they are. And this is where the European Union is saying, look, we're predictable. We don't do this stuff. We want free trade. Work with us. Now, yes, obviously, and we're going to talk about it a bit here, Europe has some tariffs against us, like 10% on our autos, but individually, a lot of their tariffs are actually a lot lower than our overall tariff levels. We'll talk about those in just a moment. Meanwhile, China is like, do whatever you want. We'll just keep taking clothes off because we just don't need you anymore. Take a look at this. You jump into this ANZ research piece here. It suggests that countries not receiving concessions from the White House are expected to be penalized tomorrow. However, China's market has remained largely resilient. They indicate here that China's shipments to the U.S. were valued around $525 billion in 2024, representing only 15% of China's exports. In other words, the United States used to represent a lot of China's exports. Now, only 15%. In other words, it's a pretty small number. China can easily get this somewhere else, and even if we tariff China, the current estimate is that it would only affect their GDP by about 0.5% over multiple different years. They also see deflation in China, making China so much more competitive on a free trade point of view. This is really a good point because if you think about it, China is so has this strong ability to say, look, we can manufacture things so inexpensively here. Forget the US where you're going to be paying for more expensive things. We'll do it better and cheaper. And China could have that advantage. Now, there is a potential downside that because of a recession coming potentially in the United States, you could see China may be affected as well. However, China is already stimulating like crazy. Authorities have introduced 30 measures to stimulate household consumption, focused on unleashing 150 trillion yuan of household savings. This is because their real estate crash in China, 40% real estate crash and a 30% real estate crash in 22 and 23, has led to a lot of doubt by consumers in China. And so people have saved a lot of money. They've hoarded cash in China. Quite frankly, the Chinese were smart to do that. Now, the government is basically bluntly saying, look, we're going to stimulate stocks, we're going to stimulate real estate, we will buy back iPhones, we will buy back old computers that you have. Whatever we can do to get you to spend money on new stuff, we will do. Now, this article says the biggest risk for China is actually AI and robot adoption rather than a decline in tariffs. I don't know how they're linking this to a tariff story, but they're basically like, tariffs ain't going to affect China as much as people think. The U.S. is basically just hurting themselves because China's going to be totally fine. They're taking all their clothes off. So anyway, this is really interesting because it actually does start making people scratch their heads on, okay, so maybe that's why stocks like Alibaba have been doing so well, because people are looking at Alibaba as potentially the Amazon of China, who's also investing in cloud services like Amazon does, and robotics. I mean, look at the path of Alibaba over the last 5 years during sort of the depression in China. It is plummeted. It's down 29% over the past 5 years. But if you just look at the past 6 months, it's up 17%. Year to date, it's up 56%. 1 year, it's up 81%. So you've got this huge revival at Alibaba, and it's really leading a lot of people to say, maybe diversifying away from United States stocks and into Chinese stocks is an option. I always look at this with a little bit of skepticism and caution, just because as you do, invest in foreign countries, keep in mind that usually foreign countries are also affected if the U.S. goes into a recession, as you get sort of a global slowdown everywhere. But a global slowdown everywhere eventually leads to, well, more stimulus. That is a recovery. China's already started with that stimulus. The United States going through a recession would really just lead the United States to eventually get to some form of stimulus, maybe JPAL, low rates or whatever. And then the stimulus wheel is moving everywhere again in the entire world. And that's when you really get to explosive growth again. Anyway, USTR is suggesting do an across-the-board tariff on maybe the dirty 15, and maybe don't go as high as 20%. So this is what's leaking out with, according to people familiar with the plans, okay? This new middle ground tariff option comes after pushback from industry and labor groups to reports that the administration is considering a 20% universal tariff. So in other words, they're pushing back against this. So this then raises the potential that instead of some kind of universal 20% tariff, maybe we're going to get like a universal 5, 10, or maybe 15% tariff, maybe against the so-called dirty 15. There's talk about the dirty 15 being China, the European Union, which obviously incorporates a lot of different countries, Mexico, Vietnam, Taiwan, Japan, South Korea, Canada, India, Thailand, Switzerland, Malaysia, Indonesia, Cambodia, South Africa. Okay. Now, this is in contrast, obviously, with countries like Israel. Israel just today announced, oh, by the way, removing all tariffs against products against the United States. If this is sort of a way of saying, oh, look, more countries should be like Israel. Oh, wait. That was just Bill Ackman shilling Israel again, which is fine. Like, everybody can have their opinion here, but let's add a little bit of color to this, because you know me, I'm not here to take sides, I'm here to provide perspective. Israel already signed a free trade agreement with America 40 years ago. 98% of our trade with Israel is free trade. Israel today removed the remaining 2%, which was mostly on earnings on tariffs from agricultural imports that they bring in from the United States on things like apples. They collected a grand total of $11.3-ish million a year in tariffs. So in other words, we shipped them apples, they taxed them, and they made about $11.3 million a year by doing that. Let me just remind you for a moment. We sent Israel in 2023 over $3.3 billion in military aid. We gave them 292 times as much as they earned from our tariffs. So really, it's kind of a rounding error. It's kind of symbolic, but it's common because this is a very normal thing people want to do. If they're so close to doing free trade, or they're so close to, spending money on infrastructure in the United States anyway, like Taiwan Semiconductors. This morning, there's a whole piece about Taiwan Semi, about how Taiwan Semi is pledging this $100 billion of expansion in the United States. A lot of those things and a lot of those plans have already been in the works to happen over the next 20 years. They're not rushing into doing these things. They're doing it very slowly. They're just adding together all of their estimated expenses and going, look, Trump, we're doing this because of you. But he does believe this almost hook, line, and sinker. So this idea, though, about lower tariffs is good because really we want to see all countries ultimately have free trade. At least that's what I want to see. The concern that's circulating now on Wall Street is that in response to Claudia Sheinbaum and Carney of Canada saying that they're going to coordinate their tariff response potentially against the United States, though Sheinbaum still wants special exemptions and favors, she still wants to be America's favorite, so to speak, and sort of benefit from this trade war, because if everybody else gets tariffed and Mexico gets the exemptions, hey, maybe we'll get Giga Mexico for Tesla, right? But it's worth remembering that the total tariffs other countries have charged us have really been on the relatively low side over history. Yes, the European Union does, for example, charge 10% on American vehicle imports. But then again, how often do you see Fords driving around in Germany? You generally don't. Now, maybe that's because of their protectionism. But on the flip side, look at the total tariff amounts. U.S. total tariff amounts on essentially all goods, right? This is all goods, so not individual categories. Sit at about 1.5% as of 2022. And you can see where other countries sit here. Germany, Belgium, 1.3%, actually lower than us, 1.4% Canada. China, 2.2%. Brazil, pretty fat, 7.3%. A Trump 20% would obviously be off this chart here. Now, that's important to pay attention to, but it's also, worth remembering that we're probably not going to get all the way to 20%. We're probably going to be closer to this, my guess, 10 or 15% level. And remember, Donald Trump is going to be cheering this $600 billion of income that they're working to collect. And so this is where I think you're probably going to get a very, very simple blanket tariff tomorrow. This is my opinion now. But if we've got about $4.4 trillion worth of goods that we import, let's just double check that. Total U.S. imports 2024, let's just say, 4.1 trillion. Okay, I was at 4.3 trillion off my memory. That's not bad. So 4.1 trillion. What I'm going to do is I'm going to do 600 billion divided by 4.1 trillion. We need about 14.6% tariffs. So 15% seems like a perfect magic number. The problem is that 4.1 million will probably shrink in response to these tariffs. So if that 4.1 trillion becomes 3 trillion, well, then all of a sudden we have to do 600 divided by 3 trillion, which means we need about 20% tariffs again. So this is going to be interesting to see how this plays out. But some form of blanket tariff seems logical to me, especially since there's a lot of talk from the Trump administration, at least from insiders, that a lot of these decisions kind of get made last minute, and there's not really a lot of planning that goes into these decisions, often because there are just so many meetings and discussions and phone calls and texts that they're getting that they're kind of overwhelmed, and they don't really have a really cohesive way of balancing it all together. So now they're just trying to find a blanket option. They'll probably give a blanket option, and then what they'll do is they'll start asking for exceptions and exemptions. Like, for example, something that's been going viral right now has been the SpaceX exemption on parts from China. You can see that right here. Elon Musk's SpaceX pleads with Trump for tariff exemptions. Rocket company asks the U.S. government to waive trade levies on Chinese-made manufacturing equipment, seeking to avoid tariffs as the trade war is escalated. Trump's fondness of tariffs has emerged as a potential wedge between the president and Musk, who people describe as the first buddy. All right, whatever. However, in two requests to the USTR last week, SpaceX requested tariff exemptions on equipment used to print and solder circuit boards. One is an industrial soldering system made in Illinois, an American company that manufactures in China, and the other is a circuit board printing machine made in China by a Japanese company. The equipment could have up to 25% taxes imposed through Trump's new plan, because remember, we're not only expecting a blanket tariff, but then we're also expecting sectoral tariffs on things like chips, pharmaceuticals, and otherwise. So we'll see. It's going to be really interesting to see how it all plays out. But you could see the math that Donald Trump is looking for, how this sort of balance is planned to shake out. And then the big question is going to be, what kind of exemptions and exceptions are we going to see? What countries are being exempt? What businesses are getting exemptions or exceptions? Like look at Honda, for example. Oh, they're going to manufacture in the United States. We'll cut them out of tariffs. Okay, so everybody who's friendly to Trump is going to not pay the tariffs? Guess it's time to be really friendly to Donald Trump. Donald Trump, woo! I'm not getting tariffed anyway, so whatever. I guess I could keep being neutral. Anyway, thanks so much for watching, and we'll see you in the next one.
Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.